Good morning, everyone, and welcome to the Friday morning TriggerCharts pre-market rundown. I'm your host, Kevin Hoffman. Just want to check and see if everybody can hear me all right, and then we'll get started. All right, looking good. All right, so before we get started, just the important disclosures here. Investing involves substantial risk. Past performance is not a guarantee of future results. Please consider this for educational use only, and as always, use your best judgment when investing. Well, it's been an interesting week this week. We had a pretty big value rotation since we saw Biden come into, or at least the president-elect Biden. It seems somewhat that he's on the path to become the president. So we'll take a look at some of the indices today, but we'll also take a look at some of Biden's plans, what he may be able to get done, and what he potentially will not be able to accomplish with this split Congress. Markets seem to be very happy with this split Congress so far. We'll see if COVID will have any impact on that. We did have some positive news on the COVID front with Pfizer's vaccine coming out, but they will face some hurdles, and we'll talk about those later on. And we'll also talk about some of the companies that may be able to step up and help and produce another vaccine. Additionally, we'll maybe take a look into some of the cryptocurrencies now that PayPal has allowed customers to hold, buy, and sell cryptos within their PayPal accounts. And then we'll take a look at some of the economics. We did have a little bit of a technical difficulty this morning, so we're running on delayed data, but since the markets aren't quite open yet, other than some of the futures, we should be okay and should be able to get through our webinar this morning. As always, guys, if you have any tickers you want me to take a look at, I know I'm not very good at trying to get to those at the end of the time today, but I'll try and move through what we've got here quickly, and we'll get to some of those tickers. So take a look at those, write them down, put them in the chat, and we'll get to them. So first, let's go and take a look at some of the indices. We had a really good jump up in the market early on in the week with the Pfizer vaccine, as well as Biden now being president, as well as the split Congress. So probably the best case scenario, it seemed, for markets with regards to Biden being president and then a split Congress. If we would have seen a blue wave, I think we may have seen a lot more downside than what we're currently seeing in the market, considering there's been a lot of upside. So let's take a look at the S&P 500. We did have this breakout on the weekly over here at the beginning of the week with that vaccine that came out. So the affinity on the weekly data should be to be long. However, we're going to see a lot of volatility in the coming weeks as this vaccine potentially gets done or doesn't get done. I know there are a lot of hurdles that need to be accomplished for it. But on the daily, we can take a look here. We're kind of sitting on this point of control here on the S&P, right around this $352 level. I think we're going to have a little bit of upside in the market this morning, just based off of the take back that we've had over the last 2 days. But as you can see, there's some downside if we break down through that 352 level down to about 344 or so. Pretty wide ranges that we've got here, considering a lot of the volatility in the market. Nasdaq, on the other hand, a little bit of a different story, especially since some of these stay-at-home plays are kind of going to the wayside. And again, like I talked about before, we're starting to see a little bit of this value rotation. So moving out of growth, moving into some of these value stocks. Some of the growth stocks, the big go-go growth guys like Zoom, Amazon, Netflix, may start to see some weakening here over the next couple of weeks, depending on how the COVID situation goes. But again, you have a pretty nice, well-defined range here on the Nasdaq in between this 280 level all the way up to about 296. So very, very wide range. I think we'll probably bounce around in here for a little while. consolidate a little bit. You can already see the consolidation has started on a weekly chart. You're talking about, let's see, 1, 2, 3, 4, 5, 6, 10 to 12 weeks that we've been consolidating at this top end level here. So something to watch going forward. Russell 2000, this will be an interesting one because it's always been weak, at least over the past, I don't know. It's been almost a year or two that the small caps have been very, very weak. So with Biden potentially not able to get any kind of tax reform done that he wanted, whether it's raising the corporate tax rate as well as the personal tax rate, you may see some of these small caps come back, especially if we can get some stimulus or a vaccine so that some of these small companies can start to produce again. So another one to watch, another great breakout here on the weekly. But again, you have some resistance on the top end here for a while, but small caps may be the play to continue to watch over the next couple of months. So most importantly, now that we know that Biden's in office and we're going to have this split Congress, again, it's going to be very difficult to get done a lot of the things that he wanted to get done. So some of the things that he's not likely to get done because they're going to require congressional approval, those include this corporate tax. He was looking to raise it to the 28% level and then also implement a 15% minimum tax on book income. As I said before, this is potentially very good for small caps. Additionally, trying to get personal income tax reform is going to be difficult to do. He had talked about raising the top rate to 39.6%, increasing capital gains tax on people, people making over $1 million, and then also increasing the payroll tax for those making over $400,000. So in all, if you're a taxpayer at the U.S., this is a good sign for us, even though we've outlaid quite a bit of money, over the last year or two for stimulus with COVID. But, eventually we're going to have to pay this back, but may not be in the Biden term, that's for sure. Improving the Affordable Care Act is also probably unlikely without congressional approval and may be difficult to get done. So maybe in a deadlock on that as well. He did talk about ending fossil fuel subsidies and implementing a carbon tax. Again, this is going to be pretty difficult for him to do. It's kind of sad, but none of these things are ever going to happen. And, it's kind of what he ran on as far as a campaign goes. So he could be fairly deadlocked as to what he's going to be able to do going forward. Another interesting one that he had talked about was a financial transactions tax. Now, we think this is going to be really good for some of the brokerage houses, whether it be Schwab or Interactive Brokers. So let's just take a quick look at those. Now, Schwab, many of you know, they merged with TD Ameritrade, so they're on path to probably be one of the biggest retail and institutional brokerage houses on the marketplace. As you can see, over the past several weeks, after we saw potentially this split Congress, we've seen Schwab break out of this really nice level here. You had a really defined weekly consolidation in between 30 and 36, and then you had a very good breakout here where we moved from that $36 level all the way up to a high this week of around $47. But if we look back here, not a whole lot going on, but with the capital gains taxes, potentially not coming to fruition, and also the financial transaction tax should be very good for these brokerage houses. Interactive Brokers, another one, a low-cost one. This is a great chart to look at as well. Very big-time consolidation point, or consolidation in between this $54 level all the way down to 46. So watch for it to move one way or the other. I really think there's going to be a floor on these unless, of course, we see a lot of market downside or a lot of people getting back to work. But really going to have a potential breakout level here above $54 on Interactive Brokers. Getting back to some of the other Biden things, he had an infrastructure plan that was talking about $1.3 trillion that included green proposals. This may be a little bit on the downside for some of the solar stocks and other alternative energy companies. However, I think, with his administration, they're going to continue to try and push the green stuff. So you're going to have to watch some of these companies for some volatility depending on which way this goes. But I would continue to watch some of these, and they could continue to go higher. This includes Enphase Energy. They provide some, I think it's solar storage and battery and software and whatnot for the solar industry. And then you have SunPower as well, which had a nice little breakout here on the daily. You can see this top end line of around 18 all the way down to about 15. And again, this gray area here, that's the do not trade. And then you also have this green area here that you could have had on the way up. That's a long signal. And then we had another long signal here right around this 1825 level. So something to continue to watch and see if he can get any of that kind of stuff done. Lastly, one of his plans was to increase the minimum wage to $15 per hour. This is a big win for small caps as well as retail and other labor-intensive type companies. So if we take a look at some of these retail stocks like Gap, we'll see that they've kind of had this long-term trend higher here that could continue moving that way if retail sales continue to go up and we get some more stimulus going from COVID. So and low tax rates and low interest rates. So we're in a pretty booming environment when it comes to stimulus, whether it's monetary policy or fiscal policy. So pretty hard to be a short seller here, unfortunately, despite some of the unknowns and the difficulties around COVID. Coles is a great little chart here. You have your bottom end. It's been on a kind of a longer term downtrend, or I should say, it looks like a heartbeat pattern on the daily. But on your weekly chart, you have a massive hole here in between 25 all the way up to 46. So looks like it tried to peak above, this unfair high here, but didn't quite make it. So that's one I'd watch, and you might be able to take a long here above this 25 half and then cut it if it comes back into the consolidation zone. But really well defined here, and it's kind of trending slightly higher. So this is an interesting one to watch going forward. Coles. Also have Ross Stores. This is not one I would be looking to touch, especially with a weekly altimeter as wide as this one is. You'll notice here, if some of you guys don't follow these indicators, when these altimeters get so wide like this, when you have a 63 to 110, when you have a $50 range, that means there's a lot of volatility in this particular position. So it's something I would kind of stay out of, or at least try and play the outsides here. Sell the high, potentially buy the low, or buy the point of control here. But this is a wild one. TJ Maxx, another good one in the retail space. As you can see, we're above the altimeter high here, so could potentially be a move higher going forward. So, what can Biden get done? Well, it seems that foreign policy, he's looking to rejoin the Paris Climate Accord and also rejoin the TPP. But most importantly, I think the tough rhetoric on China should potentially continue. And this was established by the Trump regime, so that should be something he will continue to do going forward. If he doesn't, he'll be looked down as weak. So That's one good thing. In energy, he should be able to ban some of these new leases for offshore drillers, as well as any drilling on federal land. So that could kind of stymie the expansion for some of these drilling companies and oil refiners. So something to watch going forward, and we may see a little bit of an uptick on oil prices. However, oil demand has been extremely low, and supply has been extremely robust. So going to be a tough one for oil to continue higher. In immigration, he's looking to end family separation and create a new pathway, or a better pathway, towards citizenship. And then lastly, he should be able to reappoint Fed Chair Powell or name his successor Federal Reserve president in 2022. So I think we'll get more of the same going forward from the Federal Reserve, which is low rates for longer. Some positive news on the COVID front. This is exciting, actually, because it's been on the news for some time. Pfizer is showing that their vaccine is 90% effective. And however, they want to see at least 2 months worth of data before they release anything, and that should occur toward the end of this month. The expectations are that they should be able to have about 50 million doses by the end of this year. However, it is 2 doses per person, so this will only cover about 25 million people. So we think this will probably end up going mostly towards high-risk people and Healthline front workers. But I did see a headline this morning that the U.S. Health Czar, or U.S. Health expert, did state that he thought by January most senior citizens should be able to receive this vaccine. But general population may not see this until at least the summer of 2021. So mask mandates and social distancing will probably continue, making it more difficult for some of these businesses that have been hurt, like restaurants, at least in the short run, next 6 months to a year. Now, we're potentially going to need another vaccine because there's some difficulties with regards to the Pfizer vaccine. It seems that it requires some cold storage, which I believe is negative 70 degrees Celsius. So that's going to be difficult to transport and move around, whereas some of the other vaccines that have been touted by Moderna and by Novavax do not require this cold storage. So I think that's potentially why you saw that big spike in Pfizer here on Monday with the announcement, and then a retreat back because of the fact that, one, it is going to take some time, and two, this may not be the vaccination for everyone. It may be only the initial one and may not be the best one. So I think we're going to see some news from Moderna, which, as you can see here, they have a similar type of vaccine where it's the mRNA replacement. And so that's why I think you're seeing Moderna break out here to the highs. Now, this is all speculation, but obviously this particular vaccine, if proves worthwhile, could potentially be better than the Pfizer vaccine. Again, Novavax as well, also another one that's highly touted. However, they're using a different type of technology, so you're not seeing that jump up like Moderna saw this week. This is a big win for cruise lines as well as airlines. Saw that spike up on Carnival Cruise Lines, and then a retreat because, again, nobody knows how long this is going to take, and Pfizer's vaccine may not be the best. But on a weekly chart here, this is a great consolidation area as well. Looking for that to resolve itself either on the upside or the downside. Airlines, another big winner. Continue to watch those. And then On the value versus growth front, we are seeing some downside, at least in some of these companies, whether it be Netflix, Zoom, and Amazon. For some of the stay-at-home plays, we did see some retreat there. So Amazon's an interesting one here as well. Got a good consolidation. Breakout above or below this altimeter could be a good signal to buy and or sell coming into the holiday Black Friday and Christmas season. But until we can get these vaccinations, the virus spread may continue to get worse. European Union is looking to extend their lockdown to beyond Christmas if the cases cannot be controlled. Additionally, we saw the mayor of Chicago asking people to cancel Thanksgiving plans, and as well as the mayor of New York discussing the shutting down of schools if the positivity rate continues higher. Moving on, PayPal. We'll try and get through this quick. If you guys want to load through some symbols, I'll try and start those around 25 or 26 after. But PayPal did take a pretty big leap here in allowing their users to hold, buy, and sell cryptocurrencies. I think they're limited. I'm not sure if they're limited to just the big ones, whether it be Bitcoin, Ethereum, and Litecoin. But they have been doing this at least since October, but you had to be on a wait list in order to get approved to do this. Now, there are some hefty fees, though, to buy and sell, which include about 50 cents on transactions up to $25, all the way up to a 1.5% charge on transactions over $1,000. But at least, we're moving forward with cryptos becoming a viable currency or digital currency. So what we've seen in these, if we can take a look at some of them, is that this continued trend higher on PayPal's news, but an even greater boost yesterday on Bitcoin. We've seen this move ever since the election, where there was potentially a little bit of fear, people looking to buy in to some of these coins as an alternative asset, and this continued move higher on the daily. Looks like we went from about 11,000 or so all the way up to about 16. So this will be interesting to watch. As you can see, we had a long here at around 11,600, and it's moved all the way up to 16,245 on a daily chart. So very interesting one here. Bitcoin still seems to be the strongest of the crypto coins. Ethereum also moving higher on this news. However, Litecoin, at least on a longer term chart, has been on the downside here. We're getting a signal on the weekly. It will, once the bar closes though, we may have either a long, or if it retreats back below this altimeter, we may continue to see the consolidation point. Economic data for the week. We did have CPI come out. It was at 1.2% versus 1.3% on expectations. And then CPI ex food and energy was 1.6% versus 1.8%. Federal Reserve continues to say that inflation is going to be a problem, not from a running hot standpoint, but from a low standpoint. They'd rather see this run hot. So Federal Reserve is going to continue to let inflation run rampant if it can, in order to try and stimulate the market a little bit, because we've seen such low inflation for such a long time. Initial claims are continuing their downward trend. Came out 709,000 this week versus expectations of 735,000. And then next week we're supposed to see retail sales, building permits, housing starts, and existing home sales. Otherwise, it's going to be a fairly light week. So now, let's take a look at some of your symbols here. First request I have coming in was for TIP. This is the iShares TIPS bond ETF. These are Treasury inflation protected securities. They've done extremely well in the bond space. I think it's actually the number one bond performer for the year. Can't think of any other bonds that have done as well. So this will be an interesting one to continue to watch going forward if the Federal Reserve wants to keep inflation running hot. On the daily, we are seeing a little bit of a downtrend here with some high side ceiling here around 125, but we are seeing continued long-term trend upward on the weekly chart with some support at 124 and change. So, but you're also getting a yield on this. So this is a difficult one to kind of do some technical analysis on because it does pay that yield. So, but again, it has been one of the best performers, and I think it will probably continue to be one of the best performers in the bond space, but it may not be a great performer going forward compared to equities. Let's put it that way. All right, what else do we have here? We have ACI. Albertsons. Is this the new, is this Albertsons that got spun off from private equity, the grocer? Does anybody know? I'm not familiar with this one, but I'm assuming that's what happened. The private equity spun it off. But either way, we don't have a whole lot of data yet just because this is a fairly new listing. But we are in between this daily chart, a little bit of consolidation here. Not a super wide range considering it's only about $1.50, $2 or so. But right now it's in consolidation mode, not moving one way or another. ITA, this is the Aerospace and Defense. Now with Biden as president, we are seeing a little bit of upside and potential defense spending will be higher. Especially with a split Congress, they'll want to continue to support defense and military. Did see this nice little breakout here on a weekly chart. So again, this will act as some support here at 165. Pretty interesting chart here that you potentially could take all the way up to 220 on the weekly chart. Nice little hold there. IAU, this is gold, I believe, right? IAU. Yep, iShares Gold Trust. Weekly chart looks like it's gonna, bounce around here. Hopefully, have some support here. Again, with inflation moving higher, we think this could potentially be a good play, especially if some of the fears continue to ramp up with regards to COVID and no vaccine comes through. So, daily chart looks like we have support as well, but if it should break down here, may see some downside to, maybe 1740 or so. So yeah, pretty decent chart here on gold. CWB, what's this one? Is this convertible securities? Another bond play, I'm guessing. Pretty good chart here. Nice trend higher on the weekly and on the daily. Wonder what kind of yield this pays. This could be an interesting one to watch in the bond space as well. Thanks for that, Michael. All right, and lastly, it looks like we have one more SPI. What is this? Spi Energy Co. Wow, that's some spike that it had there the other day. Something must be going on here. I'll have to look into that one and get back to you, but pretty tough one to analyze here with such wild moves, large volatility. This is looks like a good day trader's scalping type position here. So I would definitely be careful with this one. Any other stocks before we end the session? All right, guys. Thanks again, and looking forward to seeing you guys again next week. And have a good trading day. Take care.